5 days of live trading, captured in this journey through the markets. 17 trades in total, with only 2 losses. That's an 88% win rate. Every trade executed with ATR-based targets, aiming for a consistent 0.5 risk-to-reward ratio, while risking between 1 and 3% per position. Day 5 delivered 2 textbook trades. Each setup was prepared with multiple confluences, executed at the exact right moment, and lasted no longer than 5 minutes in the market. The first trade was on gold and started from a top-down analysis. On the 5-minute chart, an Elliott Wave 5 had just completed, so I anticipated a bearish ABC retracement. When the A leg finished, the 1-minute chart showed a clean reaction into a key support level. From there, I dropped down to the 15-second chart to refine the entry. On this lower time frame, price broke above the short-term downtrend line. At the same time, RSI and MACD both broke their trend lines to the upside, while stochastics showed a bullish divergence. With all of these confluences lining up, I executed the trade on the 15-second chart, entering a long position targeting the Elliott Wave B leg. The second trade began with a top-down analysis on the 1-hour chart. Price was completing an ABC correction near the all-time high zone. I expected a short-term move to the downside, a relief dip, before a potential push into new highs. On the 1-minute chart, a bullish Elliott 5-wave sequence finished exactly where the 1-hour C wave ended. These higher timeframe confluences gave me the conviction to short, right after price completed all upward waves into major resistance. After confirming the setup on the 1-minute chart, I dropped to the 15-second time frame, where several confluences aligned perfectly. The 1-minute uptrend broke down. RSI and MACD both showed bearish divergences and broke their trend lines lower, while RSI flipped its 50 level from support to resistance. With everything aligned, I entered the short position confidently, and the trade moved into profit effortlessly. Here's the key lesson. When setups are sloppy, when you rush trades without proper analysis or confirmation, those entries can shrink your account. Even worse, they reinforce bad habits and weaken discipline. Every trade setup needs patience. It's always better to have no trade than to take a losing one out of hope. Wait for the ripe apples, because if you pick them too early, they'll taste sour. Using an average 0.5 R target approach works across all platforms and on any time frame. You can check out a few examples I've made for showcase purposes on my TradingView account. Using the 4-hour chart, targeting 1 ATR profit and 2 ATR stop losses. This means the methodology also works perfectly with prop firms, not just on MetaTrader, but across platforms like Tradovate and others. For this reason, I'm fully revealing one of my funded accounts, where I passed a 50K evaluation at Take Profit Trader with a 100% win rate. On the live account, I continued through the 52K buffer zone, requested a daily profit payout, and successfully withdrew the funds to my Wise bank account as proof of the results. It doesn't matter how well you can read the charts. If your risk and money management is poor, you'll keep blowing accounts until that habit is eliminated. Even with a reduced 0.5 R target, you can still be successful as long as discipline is in place. Your bank account doesn't care about the size of your risk-to-reward ratio, so stop worrying about proving to others that you can chase big R multiples. What really matters is consistency. 5 days of precise, disciplined trading summed up in one word: consistency. If this video brought you some value, please hit like and subscribe to support the channel.
Hey!